Hello and welcome to the Lever Report, a weekly video newsletter for human-centric leaders to navigate the week ahead. I'm Drew Fortin, here with your latest update for the week starting Monday, July 14th, 2025. Continued tariff talk is keeping the market on edge. The owner of Glassdoor and Indeed announces AI-induced layoffs. New research shows how those losing jobs to AI may be losing their career altogether. And the latest employee confidence index hits a new low. Here's the news to start your week. Despite recent record highs for the S&P 500, the upcoming earnings season presents a significant test for investors. Analysts, as reported by the Wall Street Journal, anticipate S&P 500 companies' profits to climb 4.8% in the second quarter, a noticeable drop from the prior quarter's 13% jump. This comes amidst renewed trade tensions, with President Donald Trump threatening Canada with a 35% tariff on imports and floating higher levies on other trading partners, causing a Friday retreat in U.S. stocks. Interestingly, while the broader market dipped, AI chipmaker Nvidia continued its impressive run. It notched a fresh record and hit a world high for the highest market cap of any company ever at $4 trillion. Now, for leaders and HR professionals, this mixed economic signal underscores the importance of agility and strategic foresight. The anticipated slowdown in earnings growth suggests a need for tightened operational efficiency and a keen eye on bottom line results, especially if tariffs escalate and impact supply chains. However, Nvidia's surge highlights the continued transformative power of AI and technology, signaling areas of potential investment in upskilling and restructuring workforces to adopt AI tools to drive productivity and innovation. Businesses that focus now on leveraging AI to improve return on human resources investment and profitability writ large will keep an edge on future-proofing against their competitors. Recruit Holdings, the parent company of Glassdoor and Indeed, announced significant layoffs last week. Fast Company reported that the company is cutting approximately 1,300 positions, or about 6% of its workforce, primarily impacting teams in growth, people, sustainability, and research and development. This move follows previous layoffs at Indeed in 2023 and 2024, and will see Glassdoor's operations integrated into Indeed. Hisayuki Adekoba, also known as Deco, who is the CEO of Recruit Holdings, made it clear that AI is a driving force behind these changes, stating, quote, "AI is changing the world, and we must adapt by ensuring our product delivers truly great experiences for job seekers and employers," quote. This sentiment highlights a broader trend where companies across industries, including Meta, Workday, Duolingo, and Business Insider, have all made news around reducing their workforces while simultaneously investing heavily in generative AI. Now, Idekoba's message resonated deeply for me. Adaptation to AI is no longer optional, it's a matter of survival for a lot of companies. If you're not actively strategizing how AI can scale and augment your business, you risk being left behind. And the HR technology space is a prime example of this imperative. Now, software companies at large, in particular, are facing intense pressure to restructure their P&Ls to meet this moment, meaning they must leverage AI to enhance product offerings, streamline operations, and ultimately deliver better value. Every leader should be focusing on how to integrate AI into their core processes to drive efficiency and innovation. This is the only way to ensure survival. New research from HR services firm LHH shows how AI is reshaping jobs, individual careers, and talent strategies, and reveals a significant disconnect. While only 12% of career transitions candidates directly attribute their layoffs to AI, nearly half of business leaders report having already reduced headcount due to AI's influence. This unseen disruption means that organizations are evolving faster than many employees realize or are prepared for. The report, authored by John Morgan, president of Career Transition and Mobility at LHH, highlights a critical issue. Individuals displaced by AI are experiencing slower reemployment, are more likely to pursue roles that no longer exist, and are largely left to reskill themselves. In fact, only 36% of candidates laid off due to AI were reemployed within 3 months, compared to 46% of those who were laid off and unrelated to AI. And critically, AI displaced individuals who are more than twice as likely to face a transition period of 12 months or longer. For individuals, this data underscores a vital truth. To future-proof your career, you must proactively ensure you are at the top of your game. Even with the rise of AI and automation, highly skilled and adaptable individuals, the 10x coder, the amazing salesperson, or the exceptional production manager, will always be in demand. The key is to relentlessly pursue continuous learning and skills development, particularly in AI capabilities, which 65% of career transition candidates desire. So don't wait for your employer to provide training. Actively seek out self directed tutorials, on demand courses to build future ready skills. Over 70% of career transition candidates are already doing this. So, by becoming indispensable through continuous skill enhancement and a proactive mindset, you can transform your career from simply surviving disruption to thriving through the reinvention. Let's talk about employee confidence because it's hitting a new low. According to Daniel Zhao, lead economist at Glassdoor, the latest Glassdoor Employee Confidence Index shows employee confidence drop for the second straight month in June 2025, reaching a new record low. The share of employees reporting a positive 6-month business outlook fell to just 43.6% in June, down about a whole point from 44.4% in May. Even though the overall job market hasn't seen a dramatic collapse, workers are still gripped by significant economic anxiety. This decline in employee confidence is a critical indicator, as previous Glassdoor research shows that workers with a negative business outlook are more than twice as likely to look for a new job. This aligns with the upward trend in the quit rate since late 2024, confirming a prediction that more employees would seek new opportunities due to a perceived lack of career growth. Now, I think this news is a major red flag. If your employees have low confidence in their livelihood, then any capacity for passion, grit, and determination to make your product succeed is lost. When employees lack confidence in their employer's future, it erodes their engagement and commitment, ultimately hindering productivity and innovation. Leaders must continuously address this by fostering a culture of transparency, clear communication about the company's direction, and tangible opportunities for growth and development, even in a cooling job market. This isn't about prioritizing investing in upskilling and career pathways to show your employees are committed, but more so giving your employees a reason to commit to you. Give them a reason to lean in and turn economic anxiety into a galvanized and empowered action. This is how you maintain performance and retain talent. And that's your Lever Report. Check the show notes for any articles or research we covered today. If you're enjoying this content, please show your support by liking this video and subscribing to our channel. Also, ask questions or share your thoughts in the comments section. We look forward to engaging with you. Hope you have a productive week, and we'll see you on the other side.